Oh boy, here we go again. End of the month, end of the quarter. Welcome back, guys. Hope you all had a fantastic Wednesday out there, but it's about that time of day again. Time to get back to work. Thursday's end of the month, end of the quarter session is right around the corner. As always, if you're tuning in for the first time tonight, my name is Joseph. Welcome back to your nightly newsletter. My job tonight, really important job tonight. My job tonight is to help us fund the best trades, setting up for Thursday. Not just any Thursday, OPEC Thursday, end of the month Thursday, end of the first quarter Thursday. There is a lot going on in Thursday's trading session. And boy, looking around these charts here tonight, we got a bunch of great trades setting up for Thursday's trading session. I'm going to cover all my favorite trades in this video tonight. That way you can make some bank to finish up the month and the quarter tomorrow morning. And of course, we'll also talk about some stuff to avoid, because there's always a couple curveball. There's always some traps out there in these markets. I want to make sure you keep yourself out of trouble, whether you're trading on your own or whether you're trading with us tomorrow morning in our members trade room. I've got a lot we're going to cover tonight. Got a lot we're going to cover as we go into the end of the month. Got a bunch of great trades we'll talk about tonight. Before we jump in, though, make sure you subscribe to our YouTube channel. Set those notifications because I publish the best stuff every night here right on this YouTube channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. Hit the little bell icon, set those notifications. That way you always get the fresh stuff coming here every evening on this nightly newsletter. Also, too, don't forget, if you have any questions for me tonight, any questions at all, drop those questions for me. I would love to answer any questions that you might have. And if you tune in every evening, if you enjoy this video as much as I enjoy making it, hit that like button for me. Appreciate you guys tuning in, subscribing, and supporting this channel. But let's get this party going, right? Let's get this party going. End of the month is, boy, oh boy, right around the corner. Where's the money tomorrow? Where's the easy money? And where are the traps that we need to avoid? We're looking at here right now. Well, as you can see, we got some bullishness in the market right now, right? Got a bull bounce here on the Emini, got a bull bounce in the Nasdaq. We're overall pretty bullish right now on the S&P as well, but you'll see in a moment here, get a big move down on the Emini, big move down on the Nasdaq. We're definitely bullish again on the crude oil, but I'll tell you right now, it's not going to be easy to be a buyer here on the oil right now. I've got a bunch of great short setups on our radar, got a bunch of long setups we're watching for. We'll talk about some reversals and breakouts here tonight, and we get a big news event tomorrow, right? Get a bunch of big news on Thursday. We're going to break this all down. We're going to cover all my favorite trades, the long side, the short side, and when to sit on hands to avoid losses. Before we jump into this video, though, let's make sure we all get in the same page here for tomorrow. Tomorrow, of course, is Thursday, the 31st, the last day of the month. Now, as we've been talking about throughout the week here this week, the end of the month is notorious for being a more volatile time of the year. So we've got the end of the month and the end of the quarter. Tomorrow should be some good fireworks for us here, no matter which one of these markets that you're trading. The most important thing you want to keep in mind, there are, I would say, probably three things that you want to keep in mind here for tomorrow. One is the OPEC report. Now, usually we're going to hear from OPEC about 7:45, 8 o'clock Eastern time. They usually publish stuff, their findings over lunch, right, in Central in Europe, right, in gamut time. So 7:45 Eastern time, between 7:30 and 8 o'clock Eastern time, right before the U.S. markets open, we're going to probably hear from OPEC. What this means to all the oil traders out there is we saw how low volume it was today, right? We saw how kind of quiet it was today. It may be a little bit quiet overnight as well. So remember, trading is like riding a bicycle. It's much easier when it's moving. So if the market's not moving very much, we're talking about oil right now. If oil is not moving very well overnight, you know what everyone's waiting on. Wait for that report to come out, and trust me, there'll be enough volatility for everybody tomorrow after that news comes out. 7:30, 7:45, 8 o'clock Eastern time. We don't know exactly when it'll hit the wire, but that's something you want to keep in mind out there overnight and, of course, early tomorrow morning. What else do we have here right now? We get the personal income number at 8:30 Eastern time. This is known as PCE, and it's one of the most important inflation reports that we know the Fed is watching right now. The markets are obsessed with the Fed. Fed is obsessed with inflation. We're kind of waiting for that next shoe to drop, that next rate hike from the Fed right now. This may be something to keep an eye on tomorrow. I will definitely want watching that 8:30 personal income and outlays number, again, called the called the PCE deflator. It's one of the most prized inflation reports used by the Fed. That's the second thing tomorrow, and you can see that's right at 8:30 Eastern time. That's really going to get us going here, most likely, especially in the wake of that OPEC meeting announcement, 7:45, 8 o'clock Eastern time. What's the third aspect here for tomorrow? The third aspect actually has nothing to do with tomorrow. It has everything to do with Friday. Friday is the non-farm Friday. It's the first Friday of the month. And so we have arguably one of the biggest news reports of the month, or the week, I guess you would say, is on Friday morning at 8:30 Eastern time. How does that apply to Thursday, though? Why does that matter for Thursday? Well, what you want to remember is there's a big tidal wave of volatility coming early on Friday. So if you were managing a couple $100 million of other people's money, you're probably staying out of the water late in the day on Thursday. So what I always tell my students, we always talk about in our trade room is the day before non-farm Fridays, you want to try to make your money as early in the day as possible. Once we get after about 2 o'clock, 2:30, 3 o'clock, you'll usually see things really thin out, things slow down as we go into the closing bell on Thursday. So save those bullets, save that cash on Thursday afternoon, tomorrow afternoon, because remember, we got the Friday non-farm payrolls coming out Friday, and then we have Reaction Monday next Monday. The Monday following non-farm Friday is always one of my favorite days to trade. So promise me you're not going to spend all those bullets on bad trades tomorrow afternoon. Save that ammunition for Friday and really for the following Monday. So that's kind of the third component that we have here going into it. So again, OPEC meeting, be careful overnight. Keep an eye on that tomorrow morning. Personal income at 8:30 is a big number for us. And stay out of trouble late in the day tomorrow. We'll have a pretty full session, but 2:30, 3 o'clock, 3:30, be careful. Save those bullets ahead of that non-farm Friday. Now you guys know what to keep an eye on. Let's get back to our charts here, because that's where the money is, right? Now we kind of know where some of the landmines are for tomorrow. Let's talk about the S&P, the Nasdaq, and the crude oil. Now keep in mind, I'm going to talk about each of these individual charts. I'm going to go S&P, Nasdaq, and crude oil. There will be some overlap, but I'm going to keep this video spicy. We'll talk about some variations. We'll talk about different advanced setups as we go deeper into this video. You're going to learn something new. There'll be money-making opportunities throughout the entire video here tonight. So if you're serious about your trading, no matter which market you trade, or you trade all of them like we do in our trade room, you're going to learn something new in every chart we talk about tonight. So definitely stick around all the way to the end. I usually save the best stuff to the last, right? So make sure you watch all the way to the end. Let's jump in first on the S&P. Let's get this party going here on the E-mini S&P. What's the most important factor on this chart right now? What's affecting this market the most? I would say there are probably two big factors right now. One of them is the strength of that recent move down. We know that anytime we see a strong move in one direction, we know the odds are pretty good that, in this case, the bears are probably going to be finding levels of resistance to sell into for a retest of that low. In our trade room, we call this open the loop and close the loop, right? Kind of unfinished business. That's the first thing. Anytime we see a real strong move, we expect a retest of that extreme. In this case, it's of that low. What's the second piece of the puzzle right now? It's definitely going to be this trading range. Ranges act like magnets, and whenever we see these big breakouts, ranges, they love to pull back right into kind of the underbelly, if you will, of that range. And so this is a very, very popular, what we call the edge of the range in our trade room. These are very, very reliable areas of resistance right now. So we're running right into that major level really as we speak here right now. So in a nutshell, the bears have control of this market. As you can see, boy, I'll tell you, it's, I'm not in the prediction business. I'm in the reaction business. I'll take whatever the market gives me. I don't care what side I'm trading or what market I'm trading for that matter. And really, you shouldn't either. But I'll tell you right now, it's easy to see there's a lot of options right now to be a seller. There's not so many options here to be a buyer, right? The sellers right now, bears would love to sell off of this high. Bears can sell a breakdown as we go lower. And the bears, they can sell off the major highs up here too because you got that range acting as a magnet. How about the buyers? What do the buyers want to do right now? The buyers, they can kind of play that game of thread the needle. The buyers can try to thread the needle as we go higher. There's one very, very specific type of trade you'll want to look for as we go higher because as you can see, you're running right into the thick of it up there. And then obviously the buyers can also try to buy that double bottom reversal, which we know we love in our trade room, right? So we'd love to see a double bottom reversal. Buyers can definitely buy off that as well. So we definitely have options on both sides of this market right now. There is no doubt about that. How do we buy it? How do we sell it? Where's the easiest money going to be right now? Well, most important thing again is that strength of that move lower. If I draw a trend line coming up off this low, this trend line is really important. In fact, there are going to be a lot of trend lines. There's a trend line on the S&P, there's a trend line on the Nasdaq, and there's also a trend line on the crude oil. And I'll tell you, these trend lines are probably where most of the easiest money is going to be made here for tomorrow. For example, one of my favorite trades in a bear market when I see a big trend line coming up here is there's kind of two ways I like to trade it. One is to get underneath that trend line and then use it as resistance. That's one way we'll like to do that. We call these two-legged pullbacks in our trade room. And another one, if we don't get that perfect, kind of bounce back up here, another one would be if we slip and fall underneath it, would be a trap setup, right? Trap setup. And again, we know where the market wants to go. It wants to go back down to retest the low. So if I can get that trap, right, it may not go all the way back up for us. We may only get that market to give us that trap. Now, guys and gals, I know most of you guys have already taken the free trading course. You know all about traps. You know why I love traps so much. You know how I like to grab those little hidden channels and combine those with my traps. So I know most of you guys have already learned these setups. You know the rules. But I'll tell you, if you're here for the first time right now, if you haven't taken the free trading course to learn all the setups, what I'll do is I'll put a little link up here for you in the upper right-hand corner. I'll tell you, if you're like me and you hate missing the best trades each day, or you're taking too many losses and blowing your account too often, that little link up there, that free trading class will be a perfect roadmap to follow for anyone who wants to earn daily income in these markets. You'll learn my 4 favorite entry patterns, all the rules we use, when to take them, when to skip them, and most importantly, you'll see hundreds of examples of how we apply things like this, right? Like this trap every day in our trade room, right? So definitely, if you're serious about your trading, you're not getting the results that you want, grab that link up there, learn the roadmap, and that way, next time I say two-legged pullback or trap high, you'll know exactly what I'm talking about. Now, if we can get that move going lower, right, up and over, or that trap going down, now how do we buy it as it goes lower, right? How do we buy it off of this low right now, right? So if we go lower here, how do we buy this thing? Well, what's the problem? The problem is momentum. Right, there's a lot of momentum here for the bears right now. So if the market does end up back around those lows, now what we're going to do is, well, look at this one right here. This is the exact same pattern we talked about last night on the video, right? Is this not that 2-try failure we talked about last night? That's exactly the same type of setup we're looking for off of this low. If we can get back down to those lows here, let those bears try once, let them try twice. I always like to grab a look at a trend line or a trap level here and then buy into those stop loss. Remember, at this point, the sellers will have already reached their objective. And so once those bears get 2 tries, right, trying to sell into that low here now, think about where their stops are. All their exits, all their stops are right there. And this is exactly where we can look for that strong pop higher, right? So we call these 2-try failures, and you can see a great example right there off of that low. That's how you want to buy it as we have that double bottom, that retest of that low. Now, what if we keep going lower? How could I sell this if it keeps going lower? Where do the bears want to go to? Yeah, they're going to want to make their way down to that 45, 48 half, 45, 43 if things really get crazy tomorrow. That 45.36 is last week's closing price. Those make for easy targets there for the bears. Here are two breakout patterns on the S&P, and we'll also talk about a couple more on the Nasdaq too. We'll cover some breakouts on the Emini, we'll cover some breakouts on the Nasdaq, and we'll cover some breakouts on the crude oil as well. Here's one of my favorites. So let's say again we get that short, or maybe we don't, right? Maybe it just kind of rolls lower and starts to grind down. Let me get rid of this channel here for us to make it simpler. One of the ways I'm looking to sell this market, if it just sinks like a rock, is to wait for that pop and that grind. Whenever we get those pop and grinds, what it is it's a spike in channel. But what you want to do is you want to draw that trend line off those lows, bring it up around those highs, and then look for that first test. The first test is always the best test of those channels. These will usually be either traps above prior swings, or they'll be failure patterns above the moving average. Failures turn into pullbacks. And then remember, we know where the market wants to go down here, but keep in mind the first leg is almost always equal to that third leg as we go down. This is one of my favorite trades. It drops, starts to grind down. We find that hidden channel anchored off the high, and we're looking for those shorts off the high of that channel. Could be a trap, could be a failure, could be a pullback combination. This will also apply to the Nasdaq as well. Now, real quickly here, we may also see this market take off the downside, and we may see it just hold that pullback and blast, right? They didn't do it there. So we can't just sell that pullback. But if they can break down, right, take out some of these lows here and then hold that pullback, that's called a 1, 2, 3 breakout, or in this case, breakdown pattern. Mark that low. Let me back this up a little bit here. Mark that low. Draw right off those new lows, draw right off those highs, and then think about that trap setup. Either a trap setup off that high, remember first test, right? Trap setup, failure setup, pullback combination, first leg, third leg are going to be your, again, kind of you're really fine-tuning those final targets there. Does that make sense? Okay, so as we go lower, that pop and grind, that 1, 2, 3 breakout pattern, or again, don't be surprised if we see that beautiful 2-try failure once again, double bottoming off of that low. Now, as we go higher here, this is where things become more difficult, right? Don't they? In fact, why don't we talk about this in the Nasdaq? We'll keep this video going here because the Nasdaq's an almost identical situation. Let's cover the Nasdaq right now. The S&P and the Nasdaq are almost identical on this, and there are some small changes though. Let me show you what I'm talking about here. So same thing will apply to the Nasdaq as well. Let's grab the NQ. What's going on right now on the NQ? It's pretty much the same thing, right? We got a pretty strong bear move down. We're definitely bearish. It's a very strong move down. And of course, we know that anytime we see a strong move in one direction, we're going to probably see a retest of that low. We know there's a range overhead. We know that ranges love to act like magnets, and we know the base or the kind of the underbelly of that trading range makes for a fantastic area of resistance. We can also see just like the S&P, we can see we have major trend lines coming down. This is an absolutely beautiful spot for sellers to want to get short. We can also see, of course, very similarities here in this trend line coming up. But do you notice this on the Nasdaq though? Look back at the S&P. Look back at the S&P here. Notice how the S&P, look at how steep that trend line is. Okay? That does not give me very much breathing room up here, which is why you really got to kind of get underneath it and use it, right? So that's one big key difference here on the Nasdaq. Look, the Nasdaq is almost, it's, like what, 45 degrees? Yeah, it's almost a 45-degree angle. Why is that important to me? Well, because now, let's say, for example, as we go higher here, I can now use, we call a 2-try trap to get that short off that high. Now, this will obviously be kind of depending on how we set up and how it looks here, but this is one very big difference between the NASDAQ and the S&P. I don't think there's anything wrong here with a strong pop up, get into these areas of resistance coming down. We know we're very bearish here still. Let those buyers try once. Let those buyers try twice. Grab that trap set up short. Remember, let them try twice because we want to get that trap high up there to really escape that trend line. And then as this trend line comes over, now we can apply the same thing, right? We can get that up or under and up, right? That kind of breakout pullback, sell that two-try trap, sell that two-legged pullback or that breakout pullback. Or remember, if we don't get that beautiful down, up, and go, one of the ones we see a lot, very, very common in our trade room is that move down as the market begins to sink. Everybody says, shoot, I don't want to miss it. And they're all going to pile their orders up above that prior high. So those are really, I think, very key differences between the NASDAQ and the S&P. You know what I'm saying, right? So as we go higher here, we have a lot more open space. So we're not so worried about selling into that trend line. Look for that two-try trap set up over the head, right? And then again, grab that underbelly of that trend line or grab that trap as we go. The same thing is true here as we go lower. They're pretty much the same thing here now. I can grab that double bottom reversal, get those bears trying once, trying twice, and we can buy it back up again. One of my favorite trades are those two-try failures. We saw them right here off the low. We saw a beautiful one off of that high, right? We talked about this last night. There's your one, there's your two. I don't think that gets any better right there. If you watched last night's video, you were definitely ready for that as soon as the markets opened up in Asia. So as you go back down to that low, we're still thinking 1, 2, right? And then back up. Now, I have a couple more variations of that. I'm going to talk about this pattern up here. All right, so you better keep on watching right now because I'm only giving you guys about half of this pattern right now. We'll talk about it here in a second here on the NASDAQ. Same thing now as we go lower, right? Same thing now. If we go lower, I can now look for, we talked about that pop and that grind. Remember that? Draw that low off that high, find that first test, grab that trap. One of my favorites. We talked about that one strong move down, pull back, jump off the moving average. Remember, they got to jump, right? They really get to jump off the moving average. Didn't do it there. They might do it here. If they do, what do? We mark up that low. We mark up that high. Again, what I usually do is when you get those 1, 2, 3 breakouts, I find that channel off the low. I bring it right up around that big high up there. And then I start looking left. I look for those little swings, right? Because that's usually where the best money is. That's where the easy money is. Those traps up there. Traps above the moving average into a failure, into a pullback comment. Again, you'll see a lot of examples of this kind of sequence inside that free trading course as I mentioned earlier. And again, first leg, third leg, are very, very symmetrical. Here's one more, too. Where do the bears want to go right now? The bears want to get down. We got that 912. Got a big old range down there around 14,840. So here's another one, too. Let's say the market just collapses here overnight. You know, we got the situation with Ukraine right now. Let's say things get ugly overnight. Market bottom falls out of it, and we get one of these guys. Okay? It's not a 1, 2, 3. It's not a pop and a grind. It's just a see ya. It just runs. When it runs like that, what you want to do is, remember, anytime we see a strong move in one direction, we expect to get another leg in the same direction. Strong move, shallow pullback, lower low. Repeat after me. Traps, baby. This is one of my favorite trades. We saw, I think, 3 or 4 of these trades almost every day over the summertime season. Last summer, it was just like clockwork, 3 or 4 every day. Remember, strong move down gets the momentum going, right? It gets the mojo going. The shallow pullback drives all the Fibonacci traders, all the pullback traders crazy, and that lower low confirms it's not going to be a reversal. Okay, makes sense, right? That lower low is a big part of this because sometimes the market will V bottom, like something like this, right? Where it'll reverse. So we want to see that strong move, shallow pullback, and that lower low. That trap is another great breakout pattern. And again, all these will also apply to the S&P 500. If we get that, obviously we get that target down 14,900, 14,860 area as we go. And again, if it turns into a bloodbath tomorrow, 752.5 on the Nasdaq, that's last Friday's closing price. Do not be surprised. This could escalate very quickly there for those bears. Now, I promise we talk about the long side here. And again, this is going to apply also to the S&P 500 as well. Here's our big problem. The problem is that we're so bearish. Remember, keep in mind, I'm a short-term trader. I am not a long-term trader. If you're looking for long-term analysis, this is the wrong YouTube channel. I'm a day trader. I'm a short-term trader. Right, my average trade is 5 or 6 minutes. It's not 3 or 4 days. Right, so we're looking at short-term momentum. Okay, if you want to be a long-term trader, you want to look at long-term charts, be my guest. But if you're a short-term trader, forget about what the long-term momentum is. Okay, it's one of the biggest, in my opinion, one of the biggest wastes of time for a day trader to be looking at things like daily charts, weekly charts, 4-hour charts. All you need is right here. It's all you need. Okay, we make it a very good habit in our trade room to really focus on the last couple hours of momentum. That's all you really need, right? Again, if you want to be a long-term trader, great, you can do that. But if you're a short-term trader, focus on that short-term momentum. So here's the problem. As we go higher here, we have to get this boat turned around. We have to get this momentum turned around. Every time the market popped up, it got sold right back down today. So as the market goes higher right now, there's no way I want to buy this pullback. Are you kidding me? I can't buy this. Didn't work here, didn't work there. So the hard part about the Nasdaq and the S&P to be a buyer, and it's kind of like that on the oil as well, is that we have to get high enough to be able to turn this momentum around. But we don't want to go too high because we don't want to buy into these highs. This is that's why I said earlier, and again, I'm not making predictions. I don't make predictions. I just trade what we see. But you can see right now, though, we have to get enough of a reversal to get momentum on our side for the buyers. But we don't want too much because we don't want to buy right into these big highs up here, right? Because you're going to have a lot of bears waiting up there most likely. So how do we do that? There's one very specific setup that you want to look for as we go higher here. I would be very worried. I would skip one of these. If we saw something like this, the pop and the grind, I'd be very concerned with. I wouldn't look for that setup here. Okay, these pop and grinds like this, these bear markets, they tend to hold then kind of roll over. You know what I mean? This is usually a trap. You want to stay away from those. What you want is you want to get up, you want to hold the pullback, and you want to see a pretty strong jump higher. Now this is where one of my favorite trades comes in, traps. Okay, because this is where you want to draw that new channel, find the highs, find that low, look left. And that trap, that's going to be almost a prerequisite to be a buyer up here. Okay? I'm not saying it's going to be easy. We got to thread the needle. What we don't want to do is we don't want to have it go up, hold, and take out these highs, and then try to buy that next pullback. Okay? Because you're going to get something like this. Right? You're going to get one of these where it'll pull back, it'll struggle, and then it will dump right off its own weight up there. So it's and again, this applies to the S&P as well. We got to get up. We got to show me some proof that the buyers want this. They got to get that pop off the moving average, which again, didn't do it here, didn't do it there. But if they can get that pop going higher, now we go out. Again, real strong jump off the moving average. Mark that high, mark that low, look left, grab that trap. That trap will usually be just below the moving average. Traps are going to be the prerequisite for this entry because you're going to buy. You want to buy as low as you can get, right, off of that low. And again, I talk all about how to find the channels, how to plan the traps. I cover all that in that free trading class. So if you haven't grabbed it yet, definitely grab that right now. We know where the market wants to go. It wants to go back up and it wants to retest these highs. Now, it is very easy to think that we may see something kind of half-baked on this. For example, we may see something like this, where it pops up, the buyers come in, they try to hold that pullback, and they look pretty convincing at first. But then all of a sudden, all the bears are coming in, this trend line's overhead here, and all of a sudden we get those buyers once, those buyers twice, and then now the writing is on the wall, right? Now we have that 1, 2. Again, same thing here, 1, 2, 1, 2. Same thing over here. Okay, 1, 2, and now we can get that short going back down. In fact, one of my favorite trades here for tomorrow would be to get this thing to try to reverse, right? Try to reverse. Get that jump going higher. Let it try to reverse. Now, as those buyers start to think this thing's reversed, buyers once, buyers twice. And remember, the reason why these deep pullbacks are so attractive for day traders is because once they try twice here, think about where their pain is. Think about where all those stops are. Remember, this big move down is a big magnet. Same thing for the S&P. So think about where those stops are, wait for that nice strong signal, and we can short this thing going lower. Now, your job is not done yet at this point. This is where the fun starts. No, we're not done yet. Targets go back down to that low. This is where the easier money is. This is actually an easier trade to take, is now mark up that new channel and repeat after me. First test is the best test. I always tell my students in the trade room, I understand why you might not want to sell that 2-try failure. You know, sometimes it can be tricky because it's going against what looks like a very strong move. I get that. That takes some guts and it takes some experience. But this one right here is one that you really cannot afford to miss. That is one of those. That is LeBron James getting the basketball right under the hoop. You've got to put the ball in the basket, right? That is a must-take trade right there. So it's a 2-try failure. Into that, roll over, find that channel. Got to grab that first test. That first test is a very, very high percentage trade right there. Now, think about this sequence, and this is exactly what we're looking for over here too, right? This is right. So now we go up. Let's say, for example, we go up. The buyers come in, they hold that pullback, they jump up, okay? They get their nice jump higher. We grab that trap off of that low. Okay, now we take out that high. Okay, mission accomplished. Okay, mission accomplished for the buyers. Now, it's a bull market, but we have a range underneath us. We're at major double top resistance. There's 2 tops back there from yesterday, for crying out loud. This will be a third top now on this chart. Major resistance, range below us. Okay, now at this point now, I can go out and I can apply that same structure, that same pattern now. Buyers try once, buyers try twice. Think about now where those stops are. Wait for that nice strong signal, sell right into those stops. Mark that new channel coming over, and first test is the best test, right? This is the one that you want off the high. Just like that. And again, if you're not confident with the short off the high, which I understand, again, it takes a little bit of experience and it can be uneasy when you're brand new at this. Okay, I'll make sure to walk you through the whole thing tomorrow morning in the trade room while we're kind of watching it set up. And then of course it's that. And again, I say first test. It could be a trap setup. It could be a failure setup. It could be a pullback combination. And this is where the magic is right there, because now you've got this big potential move come all the way back down again. So we get some really great trades. Again, lots of selling opportunities here off the high here. And then if we can get this thing popping, again, if it can pop, there's going to be that thread the needle. Okay, there'll be a thread the needle up there we can definitely use, but we got to get that jump and then get that quick, right? Get that quick test. If this thing ends up getting to the highs here, I don't want to buy that. I want to buy that pullback. All right, guys. Hopefully that makes sense here. Hopefully that makes sense. If it does, you hit that like button for me. Hopefully by now, if you're still watching here, right, you subscribe to our YouTube channel because you can see we're bringing the good stuff here on this video newsletter. All right, we've talked about the upside. We've talked about the downside here. What about a range? What if we go sideways here? You know, what if the market... What if we end up like this? What if we end up back into this area and we start going sideways here? I have a recipe for that as well. Let's go grab the oil here. We'll finish up on the oil because oil is the one that is probably most likely tomorrow to get stuck in a range here. Okay, oil is definitely the oddball out of the group. You definitely can see that. NASDAQ and the S&P are pretty darn similar. Remember, big deal. We got the OPEC announcement coming out probably 7:30, 7:45, 8 o'clock tomorrow. There was almost no volume today. I think we had a total of, like 266,000 contracts the whole day today. You'll notice this is a 2,000 tick chart. So not a lot of volume on the oil. You can definitely tell everybody's waiting to hear what they're going to do. Everyone's looking at OPEC right now, begging them to pump more oil. I mean, I'll tell you, OPEC's in a really great spot, right? They must feel pretty good. They've got all the control right now. You got the U.S., you got Europe. Everyone's begging them to pump more oil. So we're going to see if they address that here for tomorrow. Anyways, long story short, again, we know the big news for tomorrow. Be careful overnight. Be careful before that news comes out. What's the most important factor right now on the crude oil? We have a bull market, which is basically just continued from yesterday. We have a bull market. We have a trading range, and we have some significant resistance up overhead. This is a bull market right now, but as you can see, this is not a very easy place to be a buyer. The buyers have all the control momentum right now, and you can definitely tell the buyers hold all the cards, because what should have happened here is once we saw the 1 and the 2, that little 2-try failure, these will usually just dump. You know what I mean? They'll go pendulum swing back to the side of that range. The fact that we're still held up like this just goes to show you that everyone's waiting on probably the OPEC report tomorrow morning. But it really confirms these buyers are holding on for dear life right now. Because if they weren't, this thing would have gone up 1, 2, and it would have just, I mean, we'd be back around 100 right now, right? That's the way the market has been moving lately. So we know the buyers have control of this market still. But again, look left, bunch of area. This is a really great spot. I mean, can you think of a better place to sell short right now than this? You get that prior swing low, and this whole area really could be a whole, kind of zone, right? This whole area right there could be a zone. You got this big bear move down, strong move down. What do we always talk about? Anytime we have a strong move, we know the bears want to get back down to retest that 98.44, $100 a barrel down there. Is there any better location to do that than right here? No. This is a great spot for bears to come in. The problem we have right now, of course, is it's not a bear market. It's a bull market. That's our biggest challenge here at this point. So we can't exactly just short this thing. We got the 2-try failure, but it didn't go anywhere. It didn't go anywhere. So now how do we make our money from here? How do I buy it? How do I sell it? Let's talk about some ranges here. So first of all, as we go higher, because the buyers have all of the control right now. As we go higher, what trade's looking for here? Well, how about double top reversal? That's one way to do it. So we go back up, and you could easily argue this is a pretty strong move. It's not really that strong. You see how the market kind of rotates? It was pretty sluggish. It is a bullish move, and so if we do retest these highs, if we do go back to retest these highs, this is exactly where you use that 1, 2-try failure into that hidden channel pullback. First test is the best. This is exactly where you use that sequence right there. All right. And then remember, the amount we go above the range is oftentimes the amount we go below the range. So as we go higher, buyers try once, buyers try twice, hit those stops, right? Buyer stops are sitting right below that low. As the market rolls over, now you find that new channel. And again, this could be a trap. It could be a failure pattern. It could be a pullback combination pattern, right? We'll talk more about that tomorrow morning in our trade room. Mark up the other side of that range. The other side of that trading range is an easy target. And then, of course, you got the pendulum swing target on the other side. That puts us right around that 104.5 area, give or take. Okay, that's how I want to sell this thing as it goes. And, don't be surprised too. Do not be surprised if it pops up to 110, and then 1, 2, back down, we go from there. So that's that. I'm not worried about that at all, right? To be a seller off that 110 as well. How do we buy it as we go higher? Well, we've talked about 3 different breakout patterns so far, right? We've talked about the 1, 2, 3 breakout, strong move up, take out that high, hold the pullback, and jump. What do you do in that one? You mark up that high, you mark up that low, you drill down. Keep in mind, this is a 2,000 tick chart. We do not trade off a 2,000 tick chart in the trade room. You'll learn all the time frames for entries in that free trading course. But again, bottom line is keeping it simple here, because we've talked about this a few too many times already. First leg, third leg, okay, remember that? So 1, 2, 3 breakout, 1, 2, 3 breakout, pops off the moving average. It could be a trap. It could be a failure. It could be a pullback combo. That's definitely one we're looking at here. Or maybe it pops and it begins to grind. right? It doesn't pull back and jump like a 1, 2, 3 reversal or 1, 2, 3 breakout. It pops and it grinds and it starts to grind higher. Those are great. The challenge though is they kind of drive you nuts because they don't really pull back for you. Draw that trend line nice and tight. Bring it right off that major low. Wait for that pullback. Get those traps under prior swings. Get underneath the moving average. Lock up those bears, okay? Right where those bears come in and try to sell it short, you got them right where you want them. Strong move up, right? They're going to want to retest that high. Hit them right where it hurts. Let them try to sell into it. You have all that momentum. Big bullseye right back at that high. Trap pattern, failure pattern, first pull back off the moving average. Very, very easy trade there and very reliable off of that low. How about this one? How about a 2-try breakout? We talked about this on the S&P and the Nasdaq. What if it just rips? You know, what if OPEC comes out and says, hell with y'all. We're not pumping any more oil. In fact, we're turning the spigots off. Who knows? It could happen, right? We're not in the prediction business. We're in the reaction business. We're planning our trades so we can then trade our plan. That's how you remove the emotions out of this stuff. So let's say we jump up, strong move up, shallow pullback. Higher high in price. Remember, strong move gets the mojo going. The shallow pullback drives everybody crazy because they can't get into it. And the higher high confirms, it's not one of these. Okay? The higher high confirms it's not a potential reversal. Okay? Because again, if we pop up and we start going 1, 2, start getting that lower high, you know what we're looking for. Okay? So again, pops up, strong move up, shallow pullback. Higher high in price, traps, baby. Traps, baby. Where's the target on this one? Definitely back up to retest the high. And then again, first leg, third leg. Okay, sometimes the middle leg is really small. It's just the way it works. That's why I say first leg and third leg are the ones you want to use for symmetry. How about one more breakout? Wait a second. Could we use this area for a breakout pullback? We probably can. Okay, that area that is resistance. What if this market really popped up, really sprints? Okay, then it collapses back down. Now we can use that prior area of resistance now, get above that high, pull back below moving average. Now, I'm not a big fan of trying to pick bottoms like this. What I always do is I always wait for a nice strong momentum move because that's going to give us that bullseye back at that high. Let it pull back. Let the bears wrap that noose around their neck. Let them try to get short. Then you know you've got momentum on your side. Then you know where all their stops are. I'll never forget it. One of my first trading coaches, almost 15 years ago, back when I was a baby in diapers in this business, he told me, Joe, the easiest money you're ever going to make is when you are, in this case, buying and you've got counter trend traders, sellers stuck in a losing trade. Because they're not going to question, they're going to get out. You know, once that thing ticks higher, they're in a lot of pain, and those sellers become buyers right there. And that's why I love failure patterns after strong pops like this. Because everybody wants to buy that pullback because of all that bullish momentum. At the same time, you also know those bears are squirming right there because they know they got caught. They know they got fooled, and they're not going to wait. They're going to hit that. They're going to hit that close button. They're going to buy their way out of it. Everyone's buying at that point. It's an easy snap right back up to retest those highs. Okay, where do the bulls want to go right now? There's that prior week close. Yep, 112.60. That's an easy objective. What else we got? Big top up here around 114. 114 is a very, very important number because it really incorporates a lot of these kind of prior highs up there. Weekly highs around 114. So that'd be a really juicy target there for those buyers if they can get one of those breakouts as we go. Now, here's another thing to keep in mind too. We talked about ranges. Let's talk about going lower here now. Okay? Let's say we don't get the pop up. Again, we can sell off the high, right? We can buy the breakout going higher. How do we sell this thing going lower here? We talked about earlier how there are some trend lines here that really, really help things out, and you're looking at two of them right now. Trend line there, trend line there. This is very similar. We talked about the S&P of how the market are pulling back here right now. Could we go down, up, and back in? Absolutely. That would be a great short. Because again, we have the range below us acting as a magnet now, and we can use this trend line here, roll lower, pop up, underneath, and go. Another entry pattern I'm looking for here is, because we know the pendulum swing is right here. We know the market wants to go. We know where those bears like to get to. Let's say we end up popping and grinding down. Okay, that's an easy money trade. Mark off that low, mark off that high. Find that trap. Find that buyer failure above the moving average. You know where the market wants to go. We call this trading the turn. Okay, come off the high. We know where they want to get to down here. Or maybe we simply drop like a rock. We hold that pullback and we jump. Easy, easy. Anytime we see a strong break through the pendulum swing, it's pretty much a breakout. It's pretty much a breakout. Broken pendulum usually means a broken trading range. What do we do in that situation? 1, 2, 3, break down. 1, 2, 3, break down. What do? Mark off that low, mark off that high, find those traps, find those failures, and hit them first test off the high of that channel. Okay, can I buy down here, by the way? You know, if we end up all the way back to that low, can I buy down here? You definitely can. But what's the problem? Momentum. Yeah, momentum. So if we end up rolling all the way over like this, okay, first of all, if it rolls lower like this, if we see something like this where a strong move down, a shallow pullback, a lower low, this is a pretty good trade. That little 2-try trap we talked about earlier. You know what I'm saying? Draw the little trend line off that low, off that high. I still think that's a good trade, even though you're right into that low, because you're going to have so much momentum there. You know, you might not get, that trade may not be a home run, but it will almost always retest that low. So tight, quick target, get rid of the risk, and see how far it'll go for you at that point. But let's say for example, we take the lows out. Okay, now we see the bears trying once. Bears trying twice. Now pay attention here, because this is a really big variation you want to pay attention to. Because this market is so bearish coming off the high of that range, and because we are so bearish overall, we don't want to get that aggressive on trying to buy down here. Okay, this has we call these slingshot reversals, where what will happen is you'll be in a bull market into a trading range, the price will go up, and this is like a dead man walking. It rolls over and just keeps on going, right? Slingshot reversal. So you got to be careful with that buy off this 105 area. So here's what you want to think of. The best possible buy off this pendulum swing area down here will be a double bottom reversal. So it'll be a move down, it'll be a bounce up, a double bottom, and then we use that 2-try, okay? Then we use that 1, that 2, and buy into those stops from there. Okay, that's where we're able to get aggressive on these areas here, because we already had those tops from earlier on in the week. Makes sense? Okay, so again, if we can get that run lower, that double bottom, and then 1, 2, that is going to be the much more reliable. And if we don't get double bottom, okay, let's say we pull back here on this one. We pull back. This is where you really want to wait for. This is a more advanced variation of this entry pattern. You want to wait for 1, 2, but now you really want to try to get that trap. This trap is really, really valuable in this scenario because, again, it's all very bearish. Okay, and what happens a lot of times is if you just roll over and you go 1, 2, if you try to buy into this thing right here, a lot of times it'll just keep on, it'll steamroll you. Right? Because you're buying as the market goes higher, and we know we get a bunch of momentum there. So that's why if we just kind of roll over here, you really want to get what we call a crown reversal, which is basically a 2-try failure with a trap entry below that low. That'll be the more reliable trade. That'll be the more comfortable trade, the more profitable trade if we don't get that retest. Okay, if we get that retest, then all of a sudden it's a whole lot easier because now the bears, they've mission accomplished. Remember that, right? Open, close. Right? Does that make sense? So if we can retest that low, now all that pressure is off, right? All the sellers, all the bears have now emptied their clip already. Make sense? So now if we can get that double bottom, now those bears, there's not a lot of them left anymore. So now we can get a lot more aggressive. 1, 2. I don't need that trap, right? I can buy a lot more aggressively into that one than I can without the double bottom. I hope that makes sense. Because at that point now, you've already got the bears, they're already in, right? The bears are already in. Anybody who's selling this stuff over here, they're rookies. Professionals aren't selling that. The bears are going to sell above here, or they'll sell it as it rolls over with that 1, 2, 3 breakout going down. Hopefully that makes sense there. So make sure you're careful about buying off this low here. Either you want to get that really clean 1, 2 trap to kind of protect yourself, so you're buying low and you're not buying way up here where we assume there are more bears coming in, right? Or we wait for that double bottom, and then you can get a lot more aggressive, because now the bears, they're already in, right? They've already spent their bullets. Now their stops are right there, and you can use those stops just to punch it right back up into that trading range. All right, guys? Now, there's a lot more we can cover here in this video tonight. I'm sure I've missed a little bit here and there. I'm sure we're going to see some curveballs, whether out of Ukraine, out of OPEC tomorrow, and of course, the end of the month, end of the quarter volatility. But we'll wrap things up here for now. I don't want to go into too much more of the advanced stuff here. We'll save the good stuff, obviously, tomorrow morning in our trade room. And guys, speaking of trade room, don't forget, again, like I mentioned earlier, if you're sick of missing the best trades each day, if you're taking too many losses, or maybe you're like me, when I was a new trader, I had horrible anxiety when I traded. I had a bad stomach ache when I would trade. I was worried about losing money. I didn't know what I was doing. So if you're suffering from anxiety with your trading, if you're having those mental issues with your trading, or you just hate missing, if you're like me, hate missing those best trades each day, our trade room is designed to help a new trader or an experienced trader learn and earn and do it the right way. We've covered the whole entire game plan tonight. We've planned our trades tonight. We're going to go out and trade that plan tomorrow, right? Everything happens tomorrow morning in the trade room. I'll put all of the membership links, all the free course links, all the membership trade room links will all be in the description of this YouTube video. Don't be afraid to call the office if you guys have any questions, and don't be afraid to use that live chat in the lower right-hand corner. Drop me some questions in the comment section if you have them. Hit that like button if you enjoyed the video, and you better subscribe. And I'll tell you right now, if you're still watching this video right now, you are the person I make these videos for, so I can only imagine how well you'll do with us in the trade room. If you're dedicated enough to watch the entire video here tonight, that dedication will pay off very, very well with me in the trade room. So find a way to get registered. We get a bunch of great membership specials right now going into the month of April. So keep in touch. Grab those links. We'll see you guys tomorrow morning at the opening bell. If not, you better come back and see me tomorrow night. We're going to do it again tomorrow night and get ready for the first day of the month of April. Can't believe we're finishing up the month of March. Guys and gals, thank you so much for sticking around with me here to the end. I'll see you guys tomorrow morning in the trade room. If not, same time, same place tomorrow night. We'll do it all again. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.